Welcome to my weekly review. Thank you for watching. I just wanted to point out that this information is for my entertainment purposes only. Okay, I just wanted to point out that the Nasdaq from the first part of the year till February 2nd, went up 15% to 12,269, then gave half of that back. And all it's done since then is just rally higher. The 50 simple moving average, which is this red line, is a shorter duration trend line, traded through this 200 simple moving average. And now the index is above all of its moving averages, which indicates an uptrend. You could see that it's 1.6% above its 50, 2.1% above its 200. So, those are just the facts. I'm not reading anything into it. I know that the large cap technology stocks are mainly responsible for that, but that is what the index is doing. In spite of all the negative news that you hear, this index was up 4.4% last week. And so my question is, ask yourself, with all the negative news, with all the terrible things that's going on, with all the negative sentiment, why is this index going higher? Or why can't it be pushed down lower? How come this thing isn't going down lower like it was in February? So more will be revealed. Nobody knows which way it's going to go, but it is trending higher. And this, to me, just doing this for a while, this looks like just carving out a bottom, and it could trade sideways for months and months, but it's not going lower. So before it goes higher, it's got to stop going lower, and that's what it's doing. So stay engaged, stay patient. I just want to show a couple of stocks. What drives this index is, Apple. You can see very similar pattern up the first 5 or 6 weeks of the year, gave it some of it back, and now has trended higher again. Microsoft has been really strong recently and actually formed this little base here, stage 1 base. So good for Microsoft. Meta has been one that I'm going to get to a little later because it's on our watch list. Heck, since I have it up now, this is, if you look at the weekly, it's sold off since 21. The internet's a little slow here. I'm at a hotel at spring training, so bear with me here. Yeah, since September of 21, this thing corrected. Now it's formed this first base, really, after the correction and the bounce back. We got a little base here, a little flat base, and a flat base is more than 5 weeks with less than 15% depth in the base. And you can see this has 15%. It tried to break out on Thursday, above 200, and then it just got pushed back below 200. So it might have a little trouble and might handle out, allowing the moving averages to catch up here. As the, maybe it forms a handle. This, I didn't take this trade because it's trading on news, on the TikTok news, and I thought AMD was a better trade. So I'm going to go to semiconductors. Okay. Forget the mega cap tech stocks. This is considered a mega cap tech stock. I imagine 156 billion market cap, but it also formed a stage 1 base after this huge correction. And you can see here, pattern rec picks it up as a flat base here, pattern, more than 5 weeks in duration and less than 15% or less in the base. And you can see this one traded down to its 21, even below it. This is the shakeout here in the handle, and then the breakout here the last 4 days. So every day last week it was up. So looking at the weekly, it was up 18% last week. And that's a nice big bullish engulfing candle here. So AMD still looks good to me, although, in this market, if you're up, 5, 6, 10% in it, taking profits is wise in this market. I want to take a look at some of the other semiconductor stocks because not all of them look like AMD and are actionable. This one is it's a leader because it took off before the indexes, right? This thing broke out in December, pulled back and then has been ripping higher. This is not actionable, but I do like the way it's flattening out here and allowing the moving averages to catch up. That's ACLS. Excel is definitely one of the leaders. ALGM is another one. This one broke out already. And so if you're looking at stocks that are setting up in bases, you got to ask yourself, why haven't they broke out? Are they the laggards? And maybe you should stick to the leaders. Leaders usually tend to gain more, but if you're buying something out of a base, it's probably a little safer. You probably won't lose as much. Anyway, a couple of other semiconductors that I want to look at is AMAT, because this one's it's got a base on base pattern here. You can see this base here, followed by another base. So it's got a couple different buy points. I had the 116.09 and it broke out of that to 124. Now it's formed this flat base with 12% depth. And that's definitely an actionable base right there as the semiconductor stocks remain strong. That could change on Monday, but they're strong up until, today. NVDA is another one. This is the fabulous stock. We noticed it back in October, November, when it was up like 4 weeks in a row. It looked like it hit a bottom there. Then it formed this base. Did I buy it? No. At 187, but again, it went up like 8 weeks in a row. And then I gave one back last week where it was down 9%, but this week it's formed that bullish engulfing candle and had a real strong week, up 12%. So the semiconductors still look good. That's where the money's flowing, so don't fight it. Lam Research is another one. If I could type the ticker symbol in, that would be great. Lam Research, yeah, it's forming this base here. That's why I'm posting. Well, I don't want to have a bunch of extended stocks here and have you thinking about chasing these things, but this is one to watch. If it pulls back to the 50 here and tightens up, Lam Research looks good. This is in the semiconductor equipment space. And also AEHR, obviously one of the leaders broke out early, and now it's pulled back to its moving averages here. So one to think about as it, the moving averages catches up. It's definitely broke out before the indexes, and now it's pulling back. Anyway, that's enough of the semiconductors. I went through Meta. I want to take a look at some of the other stocks on our watch list. And that's SMCI Supermicro. You can see this one was a base and then ran up 20%, which is pretty normal. Maybe a little more than 20%, then formed this base, ran up again. When you form a base and you run up 20 to 25%, it's wise to take profits, because typically they form another base. And if you don't want to sit through this, then you sell. And this is, opportunity cost. You could be, making money somewhere else instead of sitting through this base. But, if you held through this, it ran up to 95 area. And again, formed this base, came down to 69. And we had this thing, as it broke out, it was above 104, I think, 103 here, 104 there. But it gave it back and pulled back, obviously, with the uncertainty of the financial situation. Everything pulled back pretty much. And now it regained its footing last week as it bounced off its 50 simple moving average and was up 2.95% last week. And that one still looks pretty good. It's on our watch list. It's just trading a little wider and looser than I would like. LNTH is another one, a medical product stock, on our watch list that, you got to look at the weekly on this one because it had this outstanding move in 2022 when a lot of other stocks were cracking. But now it's formed its base. And you can see the bullish engulfing candle on the weekly here. And on the daily, you could see the cup with handle pattern. Like I say, I'm at the hotel and this internet's not working well, so it's not going to go back and forth between charts so easily. There it goes. Anyway, this is Lantheus, and you can see that it broke out with earnings here and then pulled back to its 21 and then blasted higher last week. So to me, that one's still actionable, still looks good. NVO is another one. This is a slower moving stock, a large cap stock with a lot of supply, but it's just forming this consolidation pattern. It pulled back last week on news, old news really, that it's dropping insulin prices, allegedly here pretty soon. So they have drugs in the pipeline, and this has been a stalwart for a long time. And it tried to regain its 50 on Friday, did not. There was a lot of market weakness, but it's definitely, on our watch list for sure. And it's been a really strong stock over time. Global Foundries, another one in the semiconductor. You can see the base on base pattern. This is more of a cup shaped pattern. And this looks to me like it's just handling out here, just kind of marking time. So they don't have earnings till May 9th, but this looks good as the rest of the market's imploding. This thing's just holding its ground. So to me, that's positive that it's not going lower. Should I go through Applied Materials? Yeah, okay. This is the base, and then on base had two different buy points. I think I went through that one. Anyway, I got my scribbling here in my hotel notepad. Palo Alto Networks. I'm going to try to switch over to the weekly here. There you go. You can see the consolidation pattern for a long, long time since, April of last year. So nearly a year of consolidation here. I really like the looks of Palo Alto Networks on the daily too. This little bull wedge pattern here as it pulls back to the 21. You can see the RS line pointing due north. So that one looks good to me. Arista Networks. I'm just showing this one because it's making new highs. This is on our watch list before it broke out here in the 135 area, and it's gone now. So just move on to the next. You can't entertain buying that one until it pulls back a somewhat. CROX. As I go to the retail space, this is pulled back really just with market weakness. Sliced its 50. I listened to the presentation this week, and the CFO essentially said they're going to crush Q1 earnings as they said sales were better than expected this quarter, and that was up through the middle of March. And it's essentially like raising guidance, saying that sales are better than expected in the first quarter. They did say that they expect the U.S. consumer to slow down in the second half of 2023, but we'll see. They have conservative guidance here at $11.21 this year, so that's some pretty strong earnings. I've seen a lot of CROX here at spring training. This is ELF. To me, this is just forming a shelf, and this thing, I shouldn't say this, but looks good on any pullback here. Friday it pulled back. Oh, Jesus, flat. So nice pullback, huh? But anyway, on the weekly, you can see it's just kind of flattening out here after the earnings run. So ELF looks good to me. I wanted to go through, I'm not going to go through any bank stocks. Oops, a couple other ones I want to show you. Spotify, you can see this one corrected bigly, formed this little base, and now it's handling out here. So to me, we had this on our watch list last week, and to me, it looks pretty actionable here as it gets support at the 21. And the other one in this space is Duolingo, the computer software education media space. And Duolingo, you got to look at the weekly on this one. IPO base, stage one, broke out, and then it kind of flattened out a little bit. So to me, this is, just above being actionable. Watch list, wait for it to pull back to the 21 and just see if you can get an entry point on that one. Anyway, I did say I wanted to look at some of the oil and gas stocks. I'm not going to look at the bank stocks. They're a mess, and that situation is going to take a few weeks. You got to allow it some time to settle down. But INSW, you can see why this was on our watch list. It broke out and then just gave everything up. I'm going to just watch this one because I've seen stocks sell off on, I guess, demand concerns to a slowing economy. But if it can rip through this 50 with volume, I'd be more interested. Tidewater's another one, same thing. Slice to 50 just due to market weakness and a lot of uncertainty and demand concerns. So I'm just going to watch that one, and Weatherford as well. It's the same deal. If this one doesn't want to turn, just slice its 50. But I'm going to watch these anyway. That's it for the weekend. I'm going to go out and watch a little golf, watch a little baseball, and you enjoy your weekend. We'll be back Monday. Never give up.